Welcome to etvFutures.com. It's Wednesday, February 20th. I'm Remy Hookey for your Commodities Recap. In energy, NYMEX crude oil futures rallied in another volatile session. Following the release of the FOMC minutes and the Fed's growth forecast, crude oil topped $101 a barrel. The March crude oil contract added 73 cents on the day, ending at a record $100.74 a barrel. The intraday high was a whopping 101.32 a barrel. Yesterday, crude gained $4.51 a barrel. With the expiration of the March crude contract, price action was exaggerated with less volume in the expiring contract. April crude ended unchanged on the day at $99.70 a barrel. The latest EIA petroleum supply data will be released tomorrow morning at 10:30 a.m. Eastern Time. The data is being released on Thursday due to the holiday-shortened week. Over in the metals complex, COMEX gold futures ended higher, rebounding from earlier weakness. The April gold contract added $8, ending at $937.80 an ounce. This afternoon, we're joined by Derek Frey from etvFutures and Options. He'll recap today's session in energy and metals and also give us a short-term forecast.
Okay, recapping the action we saw in the metal and energy pits today. I'll start with energy. Obviously, today is a monumental day. We pushed and closed well through $100 a barrel. Closed at about 174 on the front month. Our models had, for those that have been following along, had projected to move up to 100. But we've made it here. We are expecting a pullback, although we do see the potential for a blow-off move here that could carry us 2 or 3 or even more than that dollars higher in a very short period of time. It basically blows off and catches a lot of buy stops, takes out a lot of shorts, and baits in some new fresh longs above 100. After that blow-off that we go through, which we'll probably go through it for the remainder of this week, especially because of the delayed EIA data coming out now tomorrow, we will likely see, like I said, the blow-off move take shape for the remainder of this week, and then next week look for a pullback to begin, or at the very latest at the end of next week to see the pullback start to come. So overall, I would not chase crude oil above 100 right now, is I guess what I'm saying as the bottom line, and be more apt to fade any further pushes up than anything. That being said, don't look for a massive correction either. The correction we're looking for is probably only going to carry us to about $95 at best. So just be very careful with these current levels. This $100 level is a psychologically important level. We also have an OPEC meeting coming up at the first week of March, so that's going to obviously influence things as well. So just be very cautious with it. Again, I want to repeat: don't chase this market higher right now. I'd be very, very careful with any new longs put on over $100. So anyway, also turning briefly to heating oil. And unleaded to some degree. Those markets are also very overbought at these current levels, and I'd be very cautious with them as well. I would not initiate new longs up here in any of the distillates. Really look to fade these rallies for the short term, and look for a retracement here in the next over the course of the next week to week and a half. Moving over to metals, we saw a strong push yesterday in gold that was unable to follow through again today, for the most part at least. We saw a little bit of follow-through, but not anything significant. We still believe that the highs above 940 are going to hold. Basically, anything below 950 really should hold in terms of a resistance level in the short term. We continue to be sellers at these high levels, looking for a retracement just back to 900. Possibly a little below that, and then look to cover and go long again below 900. So I guess the bottom line theme for today is to be fading these rallies, not chasing them.
That was Derek Frey from etvFutures and Options with his commodities commentary. I'm Remy Hookey. Join us later this afternoon for PM Exchange right here on etvFutures.com.